I thought I would actually start by just talking about the fact that we are seeing so much in the newspaper about the impact on businesses for this soaring electricity prices and the risk in insecurity as a result. So what does that mean for those customers? Well, they've realised pretty quickly, that they need to understand how they better manage their energy. They've realised pretty quickly that the lack of enduring a national energy policy in this country that covers not only sustainability or the environmental side, but also covers affordability and security. And they've realised that no short-term fixes will be in place to that problem that are going to come from governments. So like good CEOs, they've said, what am I going to do to control my energy consumption and get a better result for the business in these adverse conditions? The learnings for them, electricity is a volatile commodity, not unlike, if they're a manufacturer with a lot of copper in their process. They need to think about the long-term price hedge against copper, and they need to think about how they can use copper more effectively. They'll have their treasury people worrying about the price hedge, and they'll have their operations people saying, how can we reduce wastage or look for substitutes for the commodity, etc. That is a sane way for a business to think about a volatile commodity, and that is what's driving businesses thinking today. How have ERM Power reacted to that? Along the lines you would expect. We've introduced products for our customers when they're thinking about the long-term hedge, that they can have a full view of the forward market and progressively hedge in their load over time electronically. We're giving them visibility so they can better manage their risk of the volatile commodity. At the same time, we're investing in solutions that will allow them to better use their energy effectively. So we will offer a range of products around demand response, LED lighting, power factor correction, give them information and analytics about their consumption, which will allow them to better operate their business. We called this out from a strategy point of view almost 2 years ago, and have been, in fact, this last year we've doubled down on the investment because we see customers really valuing that ERM Power is going to help them both on the demand side as well as the supply side. From a performance point of view, we had a good year in FY17. Our underlying EBITDAF was up around 5% on the prior comparator year. What drove that? Electricity retailing in Australia had a strong result. We grew our market share in a declining market. We grew our load in a declining market up to 18.5 terawatt hours. We're the clear number 2 in the market. We were able to achieve a gross margin of about $4.11. If you remember, we were out looking a gross margin of about $3.50. We were able to see some uplift in that in the second half, which was a combination of us managing well during a volatile summer, but as well, we're really starting to see the benefits of the long-term offtake agreement that we have with Vales Point, with Delta Electricity and the Vales Point power station. We were number 1 in customer sat for the 6th year running. I want to dwell on this for a little bit because this year, and the customer satisfaction monitor is an external monitor which is done through 400 individual 45-minute interviews with commercial and industrial customers, so it's not a survey monkey. And we achieved a score this year of 94 out of 100. Now, 94 out of 100 would be world-class in any industry, and in our industry, and as you can imagine, that's a super result. In fact, it's a record for the 21 years that customer sat measure has been run. And let's not forget, that's in a year where there has been unprecedented price volatility, and you can see the noise and the pain that Australian business is feeling from energy, and still we were able to grow our customer satisfaction because it's based on the fact that we give customers better information about their consumption because they could to allow them to make better decisions. Our US business, still in its early days, that's our second full financial year. We were able to double the load in the last 12 months. So that's the second year running that we've been able to double the business to 3.8 terawatt hours, which is a good result. Margins of about $5, which was below our expectation. We had been outlooking margins of about $7. We hit some glitches, particularly in the PJM market, that we've been able to correct. But we see, our US business is a long-term build. So we're quite comfortable we will get to that $6.50 to $7.50 margins over the next couple of years. Generation had a good year, both at Oki and Nirabup. We were at the higher end of our guidance in both those business units. We ended the year with a strong balance sheet. We had a net cash position of $56 million. Through the year, we completed 3 important funding initiatives. We were able to extend the agreement that we had, the funding agreement with Liberty. It went from $150 million to $250 million with a tenor of 3 years. And that tenor was reset from when we signed the agreement. We also completed a funding deal with ANZ Bank for about $290 million, again with a 3-year tenor, and we completed an agreement with Uniper in the US to fund our business for the next 4 years. So it was not that long ago, it was only 18 months ago, that ERM had a single source of funding from Macquarie, and it had to be renewed every year. And as you can imagine, that was quite an uncomfortable position. And so we're very pleased with the confidence that those lenders have shown in the business, and that gives us diversity and better pricing than we were living with before that. Finally, we declared a dividend of 3.5 cents, fully franked, taking us to 7 cents for the year. Final comment I'd like to make, just to put some perspective on ERM's business. We last week celebrated our 10 years in the retail energy business, which is quite astounding to think it was just 10 years ago that Trevis and Baker said, I'm going to fund basically half a dozen guys for 2 years to see if they can figure out a way to build systems and processes to enter into this market. As you know, in 2010 was when we made the investments to allow us to expand the business nationally. And so here we are 7 years beyond that, and we're number 2 in the market with revenues, contestable revenues of green and black energy of more than $1.5 billion. We've won the Customer Sat Award 6 years in a row. So we've been able to make a real lasting impact on this industry. Why is that? Because we see opportunity and we respond well to it. And if there's ever an arena where there's such change going on in this market, we're really excited about our ability to take advantage of that.